Treasury Secretary Scott Bessent recently addressed questions about the federal government's capacity to handle potential tariff refunds, stating that managing such payments would not present a significant challenge for the Department of the Treasury. This comment comes amid ongoing discussions about U.S. trade policy and the financial mechanisms that support it. Tariffs are taxes imposed on imported goods, and they've been a consistent feature of American trade policy for generations. When tariffs are collected, the revenue goes directly into the federal treasury. However, there are circumstances under which tariffs may be refunded, such as when trade agreements are renegotiated, when court rulings determine certain tariffs were improperly applied, or when policy changes result in retroactive adjustments. The question of whether the Treasury Department has the administrative and financial capacity to process large-scale refunds has become relevant as policymakers evaluate various trade strategies. Public records show that tariff collections have fluctuated significantly in recent years depending on trade relationships and policy decisions. According to official statements, Secretary Bessent indicated confidence in the Treasury's operational systems during recent remarks. Reports indicate he characterized the potential administrative burden of processing tariff refunds as manageable within the department's existing framework. The context for these comments appears to relate to broader conversations about trade policy adjustments. Analysts note that any substantial change to current tariff structures could trigger questions about how previously collected revenues would be handled, particularly if businesses or importers become eligible for refunds based on policy reversals or legal determinations. Secretary Bessent's assessment suggests that the Treasury Department's infrastructure is prepared to handle refund scenarios, while specific operational details were not provided in available reports. The statement reflects confidence in the government's financial management systems. Trade policy experts have pointed out that the Treasury has processed various forms of refunds and adjustments in the past, though the scale and timing can vary significantly depending on the circumstances. Public financial data shows that the federal government regularly manages complex payment systems involving billions of dollars across multiple categories. No major concerns about technical limitations or funding availability were raised in the Secretary's remarks, according to available information. This indicates that from an administrative standpoint, the question is less about capability and more about policy direction. For businesses that import goods, tariff policy directly affects operating costs and pricing strategies. Any changes to tariff rates or the possibility of refunds could have significant financial implications for companies across multiple industries, from manufacturing to retail. For the broader economy, tariff revenue represents one component of federal income. According to government data, these collections can amount to tens of billions of dollars annually, depending on trade volumes and rates. How this revenue is managed, including whether portions are refunded, affects federal budget planning. For consumers, tariff policies can influence the prices of imported products. While tariffs are paid by importers, those costs are often reflected in retail prices. Policy changes that result in refunds could theoretically affect pricing dynamics, though the relationship between tariff adjustments and consumer prices involves many variables. The administrative capacity question also matters for government operations. Confidence in the Treasury's ability to handle complex financial transactions supports the feasibility of various policy options that lawmakers might consider. Trade policy discussions continue to evolve as officials balance domestic economic interests with international relationships. Different stakeholders, including domestic producers, importers, consumer advocates, and foreign trading partners, often have varying perspectives on optimal tariff levels. The legal and regulatory framework surrounding tariffs includes multiple layers of oversight, from congressional authority to administrative implementation to judicial review. This complex structure means that tariff policies can change through various channels, each potentially creating different scenarios for revenue collection and refunds. Financial markets and business planners monitor these discussions closely, as clarity about trade policy helps companies make investment and operational decisions. Statements from key officials, like the Treasury Secretary, provide insight into the government's preparedness for different policy scenarios. Secretary Bessent's comments indicate that from a Treasury management perspective, processing tariff refunds would fall within the department's operational capabilities. As trade policy continues to be discussed at various levels of government, the technical capacity to implement different approaches appears to be one less variable for policymakers to consider. The focus remains on the policy, decisions themselves, and their economic implications.